The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hello, Basil Chapman. Yeah, look at this beautiful arch formation that was formed going all the way back to yesterday's low, and that was at about 10 or 9:30. Let's see what time it was. 10:20 yesterday morning at 41.13. Ran all the way in two buy modes, peak D, and then alternate count went to an E right there at that high at 21.20. That's 9:20 last night. At 41.68 went 25, and then it went kind of meandered sideways, and then look what happened. Makes an arch formation, comes down. I put the X in there and an X in there to say that that was the measured move that I was looking at. Wow, it just took it right out. It went much lower down, took out the low from yesterday at 10.20, and now we're attempting to have some kind of a rebound. We'll see if that's going to be able to succeed. Where was this? Let me just put this back again. That's the E-mini, of course. And now we're starting to see, this is the first, it's like a three-part session. Now comes the next part from 10 o'clock. We'll see what happens. We've had a huge amount of activity, but there are signs, and I'll go through that in a moment, that there are signs that suggest that how can I put this? That the rotational aspect of this market can maintain the upside bias for a little longer. Yes, I had a statement here saying you're seeing the effects of the U.S. dollar today. Everyone now is racing to safety, and that is in the U.S. dollar. Yeah, it's part of it. It is an important part of it, but it coincides with other things. That's the reason why I was getting quite cautious at this particular time. But in certain areas, I mean, let me show you. I'll do this as we're going along through the different instruments. So we've got the dollar. No, I'm sorry, we've got the Dow. The Dow has had a huge peak D turnaround just on a daily basis. The weekly chart is still within that rectangle. I've been discussing it for ages. Yeah, we're in a sideways rectangle formation because there's a rotation going on within the Dow. Okay, now let's go to the S&P. The S&P has actually had a little bit better chart going into the high of early February at 4195.44. And now it's in the sideways move, sideways that is, if you're looking at the weekly chart, but the weekly chart is finally taken out. And I also have to say, it's all very well for the person stating that about the dollar. And then you'll see those stocks that have no income. Well, that's not really true. Excuse me, 100% gain in some of these particular stocks, these terrible stocks. I would say that you can talk fundamentals as much as you want. If the aspect of a price goes from 20 to 40 or from 80 to 160, that is really good action. And that's all I'm looking at. I'm doing it technically, so I don't want to get involved in that. What I am going to say is, look, here's the S&P holding quite nicely, but look what happened to the look at this. This is the market vector semiconductor ETF, the SMHs, 248.12, down almost 5 today. But look at this beautiful, even now it's got a green candle, even though it's down sharply because it's off the lows. But look at this. It's within this containment area. And that to me is really important because what it's saying is within the rotation of negativity and positivity, you've had an upside bias that is more positive in the semiconductors. It's doing very well. If you can go to applied material, look at this applied material, made that peak actually. And there's only one way I can count that. That's an E. This is either a C, or it could be an alternate count. I'll just say that if this is an alternate count and this is actually a D right here, then you're going all the way back to 106 at some point over the next 3 weeks. But we'll go through this one step at a time because it's still only a peak C in the weekly chart. So you can tell what I'm saying is that within the rotation, there have been some, look at this, $70 to $125. This is applied materials. Let's go to, okay, I want to get out of that. Next thing is something that we've been wanting to add to buy is PAVE. This is Global X U.S. Infrastructure Development ETF. I mean, this is fabulous action. Today it's only down 25 cents to 29.44 and making all-time highs just a few days ago. This is good action. There's no question about it. I just want to go here for a second. So I need to talk about this briefly. In this particular pattern, I especially drew it in. I wanted to discuss it. In the long, narrow rectangle formation, it started about 8:50 this morning at about 41, what was that, 41 something other, 4103? Oh, that was 4112. So 4,112. It goes into a very narrow range between 41, no, that couldn't have been right, 4106 to 41, let's call it 4114. And it goes in this range, and it goes a little bit under it. And you know the rule of thumb in the rectangle formation is that you can stay in a rectangle formation a lot longer than you think, but if it suddenly spikes to a higher peak above the trend line resistance of the border, be careful, because when it comes back down again, it goes quickly below, and then it can have a little bounce to visit its friends to say goodbye, and then it goes tumbling lower. Now we've done all this work, and here's this long rectangle. I'll just keep it going to show you this technique. And what it says is, within the confines of these parameters, now we've started the first real leg to the upside, because it's broken above that resistance at 41, let's call it 41.14. And here we are at 41.15.50 in leg B, brand new leg B. The stochastic's good, and the MACD is good. So this is the first time I can say, yes, now we might have a bit of a decent rally, and that rally needs by, we're at 10:13 in the morning. Let's say that by 11:20, that's in an hour's time, I want to see the Dow actually, it can't just pop there because it's still very negative, down 340. It needs to be at the 41.24 area. That's quite a way to go. That's 9 points, 41.24. If it does that, it says, wow, that is really good action. You've tried to find a base, and the base now is going to be between 41.14 and 41.10, and that's your base of support. Okay, let's get back to our story now. And you've actually started leg B in the, there it is, leg B in the 10-minute chart. Let me just put it in there. Still a great leg B in the 10-minute because it hasn't seen the stochastic more than 23%. That's not very good. All right, now let's get back to our story. I like to do things in time. So I'm saying PAVE is doing very well. There's another one as well. There are actually a couple now that have had spectacular gains just in the shorter term and have had a little bit of a consolidation, but they aren't showing any technical weakness. They're showing technical veracity, strength. So that's really important. Let's go back just for a moment to the SMA just to see if there's a change. Yeah, just a little bit of a change. But you can see, basically, we're in this falling axis. Lower highs are much lower lows, trying to formulate a cup formation like this right here, cup formation. And it's still early in this process. Oh, I've already drawn it. It's still early in the process. It gets negated completely if there's a close below 238, and we're at 248 right. All right, within that context, we're about to go to a break. I want you to show you the QQQ had this pattern, and it broke out of it. Now it's trapped in this inside track repellent zone. It has to become a propellant zone, and I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So here we are in the QQQ1 in the Ben Basil. Noted a falling X potential on ES Tuesday. I see it on the SPY too. Your thoughts? I'm not sure what time frame you're looking at. Let me get to that. Okay, so SPY. EFG/C. I'll draw this in, because this is exactly the technique that you look. In the Chapman way, we have a particular technique. I call it the falling axe formation. Let me see if I can just find it here. There it is. That's the upside down one. I want the regular one. There it is. Okay. So in this particular pattern, there's a sharp move to the upside. Usually goes to a D, E, or F, or even a G, and then there's a pullback. And you start to make lower highs and much lower lows. And then all of a sudden it finds some support and it makes the cup formation potential. And then you can get a one-to-one expansion from the downside to the lower, from the lower trend line to the upper trend line, declining trend line that is. And then you can go one-to-one. But what you do is you keep looking at the left side to see peaks that it needs to overcome to get back to the top. So what are we looking at here? We're looking at... Here we are. Look at the resistance lines here. So here's the upper trend line, making lower lows and then much lower highs and much lower lows. And then at a certain point, it tries to do this. It tries to make this cup formation right here. That cup formation that says, if I take out, and of course within this trend line, what I like to do is to make sure that you understand the importance of the trend line. It has a Chapman wave inside track. So this is still early in the day, but you want to be able to see a rally that takes out decisively that left side high, the trend line that is, and then you can go to the next high, which is the left high on the side, 416.49 in the SPY, and then the high that was made just recently on the 2nd of February at 418.31. So that is a fighting pattern. It's a fighting pattern between the falling axe breakout to the upside and the potential for an arch formation, the dreaded H. This is the other pattern. So there are always two fighting patterns. Here's the other one. Let me just show it for you. There it is. So I'm always looking at straight lines up or down, a mix between the straight line and a cup, straight line down, and an arch, and this makes a dreaded H pattern. If it takes out the left side low, it's very negative, and this is the positive one on the upside. So it's a mix of 1 and 2 and 1 and 3. And what do we have right here? We have a mix of down and an arch formation. That has to be taken out, but the MACD is weak. The stochastics are 70%, but the 9-period moving average is still way above the 14. Darn, look at this. I was about to put in a trade, and I thought I'm in the middle of, there it is. There's your leg C. Put the people in the den saw that I put an up arrow during that break, and now we've got that rally going from 41.22. This is someone who got in at 41.01 earlier on and then got out. Yeah, the low was 40.98. Just 2 points off the low, and here we are at 41.22. So what would I do then? I'd immediately go to the next level of resistance right here. I'd go to that particular low right there. I'd move to the right and see what happens. Measured move, it's called bar symmetry. That's what I do all the time. Looking at bar symmetry, there it goes green. Okay, and now what do? We plop it right there. And you've got another 10.24. So you've got another 2 minutes in which to try to get to the high of the 841 this morning at 41.26. And here we are at 41.21. We'll see if we can do that. Upsetting. It's really upsetting. Okay. Now what we're looking at is within the context of, I had questions and I'm going to do them right now. Thanks, Basil, for anyone who ever struggled with understanding that pattern. I believe that was the clearest description ever. Thank you very much. I try to do that as much as I can. And sometimes, we are so busy involved in all our different techniques that just to articulate it clearly is not always that easy. Okay. What we're looking at then is within the context of, where did I want to go? Yes. So I wanted to show you. So the IWM, that's the Russell 2000, now down $1.60 at 192.85. That's the same pattern. It's a little different now because I can move. I remember, I like to make these flexible. I would have made this right down here. But why do that when, in fact, we've already moved higher? It's the same principle. And the principle is you want to check out to see that you're going to be able to take out as clearly as possible this particular resistance. So that's the resistance right there. So it's at 192.94 right now, the IWM daily, and you want to see this very quickly take out not just this trend line right here, but take out the high that was made on the yesterday at 194.55. That'll be ready. 195 would be really good action. If it doesn't, I don't know. It's going to be tough. All right, so let's go on. So I needed to do high-grade copper. High-grade copper is underneath the 14-period moving average earlier today. Now it's come back and it's testing both the 40 and the 9. It's down. It's up 0.06 at 4.07, holding steady in a rectangle formation. Looking at the silver. Silver has just continued to be very weak. It's up 0.008 at 21.58, and you can see I have no choice. In fact, I have to wait till tomorrow, Friday. Oh, and tomorrow I'll be doing my show 8 o'clock to 9 o'clock in the morning. It'll be replayed at. I'll be trying to do an overview for the next week tomorrow, and for the subscribers to my opening call. I didn't say anything today. I'll maybe do it tomorrow. I might even tonight do an overview. Oh, we've got a long weekend. No, I've got time. Over the weekend, I'll get to it. I won't be able to get to it until Sunday evening, but Sunday or Monday, I'll get to it for the overview. Good. Okay, I won't be doing anything. And now we've got a leg E to the downside in silver. The stochastics at 6%. That's really weak. And the MACD's very weak. 9 is way under the 14. The price is under the 200. It's going to take a lot to break and close above 22.30 at 22.46, which would mean that you've gone over all the different levels of resistance. That's going to take a lot to do. I will be putting a down arrow, I'm pretty sure, tomorrow. For the weekly chart, I have to wait till the end of the week. Gold, just once again, gold is down just 4 at 1841. It's trying to hold the 1830s, which is where the 200 period exponential moving average is. I don't see this going to a buy very quickly. I think it's going to stall for a little while longer. And to go with that, look at this. This is the USD JPY. This is the dollar yen currency pair. Leg C extended above the 200-period moving average, making 133.80 the magnet line. 134.22 right now, up 0.04. So I can see it testing it. But the left side high at the 200-period moving average that repelled it exactly was on the 6th of January at 134.77. So we're in that area right now. We haven't gone above it, but we're in that area. Look at the USD JPY. Break coming up. Look at the EUR USD. That's the euro. Look at that, making lower lows and lower highs. It's at 1.066. It's stalling right here. It's really in an arch formation and looks like it wants to go down to the 1.060 area. I'll be back in a moment. Dow's down 334.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so we made a little double top at that deep C right there, just underneath the target of 41, what did I say, 26. We went to 41.22. And now we're trying to make a cup formation, trying to get back to the D. Now it's getting a little harder, but we should get it. This is at least peak C1, C2 at this particular point. Leg B in the 10-minute chart. I like to use different time frames. And the stochastic still very weak at 47%. All right, let's just get back to this. So a couple of things are going on here. If you're looking at the GDX, we've gone under the 200-period moving average. And the target is this left side low of the week. That's the 23rd of December at 27.55. Today's low is 28.14. So we're very close to that particular one. Am I correct? And the low today? Yeah, 28.14, and the low of the 23rd is 27.55. That's really what I'm looking at. And now it's starting to change the monthly chart. It's not as good as it was. Now, a couple of things I'm looking at here. Had a question today of, where did I go? But the first one was Dexcom. Dexcom Diabetes, they have DCM. Yeah, DCM, Dexcom Inc., Diabetes Monitoring, made a peak D. I have this left side, right side price time match, which says that, Basil, you've spoken about diabetes before. Yes, I'm in Dexcom. Lower down, I'm thinking of adding to it. What do you recommend? So, well, I would do this. Look, you've got a peak D way back in December at the 125 area. It pulls back to the 200 period moving average. Doji candle, just a beautiful. I did see this. I don't know why I didn't actually get it. Then there was earnings, I think, had a beautiful move up. I like what I'm seeing very much longer term, but I would not add to it at this particular point. You've got to gain. I want to see how it tackles a pullback into this candle, the candle of the 10th of February, with opens at 112.65, makes a low of 111.21, goes all the way to 120 round number high, and then the next day goes to leg D, becomes a peak D at 121.31. It's holding so nicely. I wouldn't want to spoil the position by saying getting in a little bit here and then see it go down about 4 points, and then now you kind of messed up. I don't know where you got it, but you've messed up your actual portfolio itself in terms of the average price. So why don't let's look at it again, maybe Tuesday. Maybe by then it's moved up and I'll say, oh, geez. But in the meantime, I think I'd rather hold off a little bit because of the daily chart cup formation. I do have a target of the 125s, and that says by February, the end of February, beginning of March, that you try to get there. I would prefer now that it's just a slow move to the upside and not a stalling formation. So let's just hold off right here. I'll let you know when I think it's going to be, at least in my opinion, where I think it's appropriate to add. Peak E was way back in the 160s. Plummets down to the 60, around about the 68 area. And here it is at 118. Very nice rally. It's a great company. I've never had it. I've always thought that this is one I should get in. And I keep missing it. I just see it too late. So, but in this particular case, I am seeing it, and I'm saying, hey, it's doing very nicely. Next question came in, which was IBKR. IBKR, this is a brokerage company. It's called Interactive Brokers. Really I believe, one of the very best in the business. This is for, it says Interactive Brokers. They do everything. They're really very good. So if you look at this trend line in the monthly chart, you see how I can go from there to there, and it's just snuck out above it. So if I put a Chapman wave inside track repellent zone, so far in the month, it's going out of it. But if I put this one in right here, you'll see that this is like an expanding cone formation to the upside. So the best thing is to say, wait a minute, it's already had one cup formation with a rising high, and then a lower low, and then a rising high. So it's saying that in this particular context, it's done very well. It is held beautifully from that peak D doji candle back in somewhere in November in the 78 area. It pulled back to the 67, 68 area. Yeah, it's an 87 leg C. I'm not calling this an F. I think this is a C in the weekly chart, but I am calling this an F in the daily chart for now. I like it. So the question was, where would I add? You know, this is exactly the same thing as Dexcom. I don't think I want to. I don't want you to risk. I'm of the impression that we are still in. We keep having this, what I say, a cautionary day, just cautionary days, and we had one of those today already. Now the Dow's only down 292. It was down way more than that. And what I am looking at is it's rotational. And the IAI, which is we were still along the IAI since 2020, IAI, in the 45s, and here it is at 104. It's already, it's a fabulous move, but 116 was the high in November. These are all doing well. I think they're getting close to some kind of a digester phase. So I'm just going to say to you, don't be anxious. You've got a position. It's doing very nicely right at this particular time. If you wanted a trading position, that's actually almost the same for Dexcom as well. If you want a trading position, that really wasn't the question. I'd say, yeah, you could both. In this case, 118.39 Dexcom, you could nibble on it here. And as soon as it breaks above, if it does, instead of breaking down and going even 2 points lower, I'd be out. But if it actually moves above yesterday's high of 120.28, I would say the target would be 121.12 for a leg E. And then I would raise the stop, or I take it off, or I would take a good part of it off and keep a little bit. And it's exactly the same thing with IBKR. There's no difference. They're doing the same sort of thing. If you want a quick trade and the market actually comes back today in the end to say, wow, buy the dips, what a market, then I'm just going to say to you, that's the way to trade it. But I think this, in all the cases, you're looking at a kind of a position play. In other words, you want something that has legs to it and time. So I'm just going to say to you, I would either that, you grab it at 87.95 right now, and you just have a trading stop on this new position. It's just a trading position. But if you're looking for a longer position, I think I'd wait a little bit longer. I'd rather get it down. It's at 87.74. I'd rather be looking at it in 84s to 83s and say, is this the time? Okay, next question came in. Where did it go? TDOC. So TDOC is now same thing. It just says TDOC, please. So Coda, I don't know. All I'm saying is that this is a slightly different one. This is a stock that had a round number 308.00 round number high in February 2 years ago, 2021. Had a little bit of a tumble, went down to 23, was it? 22? 2160, January of this year. And now it's having it's made a peak A in the weekly chart. It's actually still acting very well. Yeah, now this is different because this is a longer term position. If you're already in the position, I suspect that you are in the position and you're wanting to add to it. Oh, I'm just looking at the futures moving up like this. Oh, how frustrating it is. Oh, look at this. There's your leg D. Yep, there's your leg D. No, it's more. It's DE. This is a leg F. Oh, my God. That's exactly what we were looking at. The E-mini up. It's now down 29 at 41.28. All right, let's get back to the T-Doc. Give me a second. I got the break coming up. I want to look at TDOC. I'll try to look at it with an unbiased point of view. Yes, I'll.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so look, Teladoc's trading at 31.40, down 57 cents. So it had a fabulous move, gap up, pulled the gap, went to a leg D right in the 34s, pulls back to the 29s, and now it's trading at 31.42, a green candle so far, even though it's down 55 cents because it's off the lows. So I like this very much. I think it's starting to move. It's starting to say the monthly chart is just horrendous. The weekly chart has made the H pattern that turns into, you got 2 to 3 bars, that's weeks, that is, of testing. So what happens is, this is the low you're looking at right here in the weekly chart. That's the low of the 14th, the week of the 14th of October, 2308. It takes out 2308, it goes to 2235 on the 30th. It has 2 bars, and the third bar needs to be above. It hasn't closed yet below that. And then it does close that on the 6th of January, the week of the 6th of January at 2160, and then follows up and immediately closes above. And you're looking at, this is a fantastic technique if you want to learn it. You see the way the MACD refused to budge. It kept running, even though the price kept making lower lows in the weekly chart. Stochastic was not that great. That is really bullish. And that says there's a chance that you can now see a rally that'll close above. And that's the most important word. The word is close above in this arch that goes to a cup formation, very positive, and says that at any point in the next few weeks, if it closes above the arch high, this is peak A at on the 18th of November of 3473. If it can close above there, it says you can go to the next peak, and that's all the way up in the 40s. So I like this very much. To add to it right now, I would, in this case, I'd have a position that is split, and the position would say the split add-on right here is, I'm taking a part of it and I'm going right in at 31.32. This one has a low today is 30 round number, close below 30, and I'm out. But it's on a very short-term basis, because if it works and it goes above yesterday's high in the next 2 days, that's going to be really important. It's a good start. It's a horrible-looking chart. 308 down to the 20s. Oh, horrible. But on a shorter-term basis, this is starting to work, and that's what I'm looking at. Okay, so that's what I said there. If you aren't in it at all, it's a little different. You do have a risk. I'd have a 2-point risk at this particular stage, and I'd just say nibble. Just start your position right here at 31.33 if it's brand new. But this one has a so that's like an 8% risk, but it's on a small position. And if it starts to rally, we can talk about it and then give me a yell. Next question was X, which is U.S. Steel. X is trading at 29.96. We are long from the 26s. It ran up to 31.34 on the 3rd of February. It pulled back quite sharply into the 27s, doing very nicely today. Is it making a very deep cup formation? I think it's trying to. I like it very much. I like it out of these infrastructure type stocks. I do like it. I would love for it to close into that candle, the wick of the 3rd of February, but I'd like to close it above the high of the 26th, which was 30.30, and it's trading right now 20.96. If it closes above that, it says great. Now you've got that rule of thumb with that long wick. If at any point on a 60-minute chart, if for 90 minutes of the 60-minute chart, you can start to have closes above 30.30, it says a really good chance that you're going to 31.34 to retest that high, but it achieved everything it had to in this cup formation that I'd already printed out and showed subscribers, and the monthly chart is improving a little bit. So that was a question there. It was a question of U.S. Steel and Alcoa, also deep cyclicals, aluminum. It's not acting as well. I like it on the weekly basis. It's starting to make higher highs and higher lows. It just needs more proof of the pudding. So it's gone to a peak D around about 57. What was that? 57.61 on the 18th of January. And it had a move, A to B equals a C to D, almost like that, in the pullback. So this is, let me just do this quickly here. Look, this went to a peak A, gray B, and a C minus because it took out the left side low. So this is an arch formation, and it made the arch formation and took out the left side low, and it's way more than 2 bars that is below that. That means it has to start a whole new buy signal and buy mode, etc., to be able to break into the 52s. It's at 49.71 right now. It is improving, but it needs a lot of homework to do that. Most importantly, it needs to hold 46 support. If it takes that out, that's a real problem. But it is making higher highs and higher lows, and that's what you look for a trend. Next question came in at, where was it? So you remember yesterday we were looking at Valet. So now we've got some others in that whole materials area. Yeah, Valet is coming off the low. It's at 17.07, up 3 cents. So this is the question. In a pattern like this, is this where you would buy it? And I would only say, I need more, excuse me, I need more proof. I need more proof at 17.06 that it can close above the 14-period moving average of 17.23. It is improving, but that weekly chart says it needs a lot of work as well as the monthly. So Valet and Mosaic, also in the materials, this is what potash and stuff, yeah, potash, phosphates, etc. The Mosaic company, this is a little different. This went to a peak E. It's up at the higher range. So in this particular instance, the fertilizers are doing much better, or at least this one is. I like it very much. So Mosaic is above the 200-period moving average. I like this very much. This is out of Valet or Mosaic, different prices, but I like this one much better. The monthly chart is not great. It is making an H pattern. It's a good pattern there. This has made very steady upside candles, and this week could be the first time the 9 closes over the 14. Let's wait until Friday at 4 o'clock, but that is a good sign. I like this very much. Now, what would I do? It wasn't the question. The question is just could I analyze it? And the answer is I would have to call this an F on the move up, and I suspect that if I had to do this, and I'm going to do it right now, if I had to do this, and that would tell you that, yeah, it's not quite a stalk leg formation. Actually, I shouldn't do that because it's, yeah, I could. Gosh, something tickling my throat there. I like it, but it says it's kind of trapped in a range between 52.30 and 49.49. Just for the moment, that's where it is, but it's acting much, much better. Next question came in. Where did it go? Valet, MC. Oh, earnings, I believe. Oh, tonight, Valet and AMC. Thank you, Pat. So Valet, let's just go back to Valet. Valet, after what it's done, thank you. That makes it does make a little bit of a difference. So Valet, that's earnings. So it's got nothing to do with this past couple of weeks where it's pulled back. It has to do with this. So the rally has been really good for Valet. So I suspect that the earnings could be good. The outlook might be what either disappoints or helps it. So let's just do this. In terms of getting a position right here at 17.08, if you want to risk it tonight, it should be good earnings because they're looking for weeks. This is October. Since September has been running, so the earnings should be good. I'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So first you asked me about T-Doc. Isn't it an added to it? Good. So just keep your stop starts acting quite nicely right now. Valet has earnings out tonight. I can't play that game. All I can say is that if you look at this chart right here, the cup formation has been rallying. It should have really good earnings. Maybe the outlook is going to be the disappointment. So two ways to do it is, one, to step aside and do nothing. And if it rallies very strongly, it says, hey, it's filling in the gap. That would be an island reversal if it pops quickly tomorrow to the 1740s and holds it. But if it just kind of stalls, I'd say hold on a little bit. If you want to start a position right now at 1708 and it's just a trading position, I think your worst case is that it is a little disappointing and pulls back 50 cents or more, but it could certainly pop. Yeah. Next question came in as where was it? What was the question? Oh, get to the question quickly. Let's see. Oh, Vuzi. V-U-Z-I. Vuzi. Vuzi is acting well. It's at 5.31. Vuzi Inc. It did hit the 200-period moving average. That was like a magnet and a repellent. If today's Thursday, if on Monday it is trading above this candle right here, the candle of the 9th, the high was 557. If it's above that, it's going to re-tackle the 596 area. So let me just sum this up. I want to quickly show you something, what I like to do. I used a phantom peak right there on those two parallel highs. And very often the phantom peak stays as a phantom, and then all of a sudden it goes from what should have been a D, which is really a C, it does go to a D. Now it's gone to the D. It's already the exact timeline for the high that was made right here at 8:30 this morning at 41.41. If you take the exact midpoint right there at 9:38 at 4,098.25, you can see we got really close in time and price, and now we started fading. Now we could start to stall a little bit. This is now the fourth part of the session. There's a whole nother 2 or 3 parts to go to